Good evening, all. Ira Epstein with your Spider ETF wrap-up, and this wrap-up is for Monday, the 24th of October, 2022, just about 6:40 p.m. So another day with the stock market, strong update today. Markets did big turnarounds in a lot of areas, but you can see the stock indices up one more time. Real estate still having its own problem here. Tech, a little bit of an up, a good one, I thought, actually. I'm being funny there. ARK, big trouble still. She did get down going for the lows, managed to rebound there, but nothing exciting as far as I'm concerned. Rivian still having problems as the metals are. Now, we are looking at a market that is getting ready for the European Central Bank. The Bank of Canada. The Bank of Canada is going to tell us their monetary policy on Wednesday. European Central Bank is Thursday. Earnings are this week. We're getting all the big boy tech companies. We'll see if the dollar headwinds have created a problem. Now, there is a market that I keep reading about, and you got to pay attention. Freeport, the copper producer. We've got to be looking at this. The normal companies, because of the Ukraine war, that would deal with Codelco, and Freeport and all these companies coming out of there, they are now asking for longer term contracts, not short term. I read that Codelco has been fighting with its customers about 3 and 5 year contracts that the customers want, because they're realizing between the energy shortage, and you need a lot of energy in the copper mines, between if we come out of this malaise, this recession that we've got around the world. I think we're in a recession. I know you might not, but I do. But let's assume you give me the benefit of the doubt and you say, Ira, we're coming out of it fast. Well, copper's got to be one of the big demand items. Copper's already looking at China that did nothing on the COVID-19 situation. I mean, nothing. They're staying with where they're at. And President Xi has gone out and surrounded himself with like-minded people, throwing out the reform-minded people. So there's no reason to think they're going to change their COVID policy, and their demand for, be it oil and other markets, coming down. Now, China today did release some numbers at the end of the day, and they said that they grew 3.9% through September. Okay, that's better than the 3.5% prior. Why didn't they release that during the Party Congress? Because it's nowhere near 5% is my guess. Number two, I don't believe them. What can I tell you? They're going to make up numbers as they want to go. When you look at Freeport, McMoran, and that is the name, you can see how the market has been coming up. We've come down into this area, and I'm not saying we're ready to run just yet. I think you'd be ahead of yourself thinking that, but I think you've got to look at it and say to yourself, there's probably not an awful lot of downside in this if people are asking for contracts that normally be a year or two and they want 3 to 5 years out. That's, to me, going to put a floor in some of these markets, because you can look at your book, what you've got locked in, unless there's a cause to let them out of that contract, and you have a better idea what you're doing. In addition, production's been down at this company. So that's another thing I'm looking at. The market has cleared the 50-day, the 100-day average, and it's been over the 18 for a while. The resistance right where you're at. The odds of staying over the Bollinger Bands, and the black dashed lines are your Bollinger Bands, 5% of the time is all you'll do it. Markets get to them and they'll often get thrown back. You did it before here, you did it before here. That doesn't mean I turn bearish. That's where the market should have its problem on this rally, and then step back. If something else happens, it gets my attention, but otherwise, that's what I think's going on. And in addition, the slow stochastic reading is up to 73. Okay. When I look at Meta might have bottomed out today. You're still in a pattern of what? Higher lows, higher highs. Can't get away from that. You're under the 18-day average. So the bias is down, but the trend is up, and that's twice now that the market has done a very good job of hitting the lower Bollinger Band number. Now, for my traders on Meta, take a look at the low today. You hit the band. You know what I told you this morning. In Apple, I also told my subscribers, I said, if anybody's long, I was looking and it had not hit it when we put out the update this morning. You can see where the market opened. It climbed later in the day. I said, that's the zone. I said, you want to start dumping Apple because between there and the 100 days is going to be hard. I know you're going to tell me, Ira, it's going up to the 200, it's going to $180 as some of the trade houses think. Okay. I'm not in that camp right now. You're overbought. You're at the resistance points. You be in that camp. I'd be cashing in and going elsewhere. Now, Netflix went down today and Disney fell with it. In fact, a whole host of the streaming ones did. Where are you in this? You're up to the upper Bollinger Band in the 100-day average. This is not a spot where you become a hero. I'm going to repeat. I think you get up there on days like this. This is where you get your shot to liquidate things in your portfolio or parts of them, and you decide what to do with the money if the next break comes. I happen to think another break is coming. And no, I don't know if it's a big break or not. I just think the market will give us the opportunities, as trading markets do. When I look at XLF, what would you do if you were me and every night you're here and you tell traders, hey, if you get up to the 100-day average in the Bollinger Band and those numbers have converged and you get there, what are you supposed to do in the market? Well, today's high is 32.77. The 100-day average, 32.71. The upper band, 32.84. They've converged. I think the pros are peeling off some money right here. In XLI, you hit the Bollinger Band again and you're overbought. Bye-bye. XSD. So the semiconductors have had a bear market rally, nothing else. This is a market that came off the Bollinger Band, rallied back to what I call the line in the sand, the 18-day average of closes. Now we have to see what the market is capable of. And I know what you're going to tell me. Ira, if it closes over 152.79, it's over that number, it's be the first buy signal. Agreed. The risk would be back, though, too much for me, back to 146.55, given it just came from this low. I don't know that I'd want to do anything just yet. We then get to the home builders. Well, with mortgage rates 7% plus, it's pretty hard to sell. Tonight in my written update for my futures traders, I go through what was said today by the Mortgage Association and some of the other speakers there. They think that you're in a housing recession officially now. They look for current rates, which will be over 7%, to fall back at least to 5.5% by the end of next year. Home prices down a bit, depends where you live and how much they're going to be down. Rent prices, they think, have peaked out in most of the country and coming down. Just telling you the articles that I'm reading. When I read XLE, you can see the bought? No, that's an embedded reading. That's still strong. Got to remember, you have to learn how to work with the enhanced Bollinger Bands. And they tie in with the slow stochastic. Whenever you get readings like that, it tells me that on the breaks, the traders want to buy. The problem that this market's given traders is every day it goes up and makes a higher high and doesn't take out the prior day's low. So it's one of those markets that's walking away from able to buy the break. In the gold market, I'll let the other guys want to own it. Again, I'm going to repeat. I can get 4.5% on. I was writing today about this too in my report. I just read you can get, the big brokerage companies can get you, and I just read this on the big CDs, big money, 4.5%, 4%, right in that range. This is a no-brainer. I mean, I walk into the bank, or you do the littler guys. Maybe it'll give us 1 percentage point, but not when you package a big number together. They're going to get takers on it. A 1-year or 2-year CD at 4.5% does compete with the losses the stock market's having right now, and it gives you a balance in your portfolio that at least has cut down the inflation number. I don't know where inflation's going to be. I look around me, I'm sorry, folks, I just don't see prices coming down and too much. My wife came home, today's Monday, so Saturday. She carries in her Land O'Lakes butter. She's pissed to begin with because the Indian's gone off the picture. And then she's really pissed. She goes, you know what you're paying? Of course, she says what I'm paying. You're paying $6 for this. She said, I was buying this for $3. And they've taken off the picture. What can I tell you? She is right. Silver. Coming up to resistance at the 18-day average of closes. Oversold market that is correcting. Certainly not bullish the way I look at it. Copper, we're just looking at Freeport, drifting sideways at the 18-day average with a narrowing Bollinger Band. So when you see that narrowing band, it means volatility is coming out of the market. And just what my finger's doing, you're spinning around in there, and you have to tighten up like a spring, waiting for the market to get tight enough to burst out one way or the other. Hasn't done it. TLT, you got all these central banks coming out. You think they're lowering rates right now? This is why you're coming down. Now, I know what you're going to tell me. You're going to tell me you know that in December, they're going for a 50 basis point. They don't have to go for the 75. And you know that by March, we're going to be talking 25s and 50s. That's what the bulls know. So if you're in the bull camp, that's what you know. I don't know what you know. I'm more data dependent. And that's where the argument's coming in. If the Fed is data dependent, that means they're 90 days back typically on the data that helps them project the future. Did you hear what I just said? Think of the data we collect. Not everything that happens in the month of October gets released in November. Some of this data will get released in December. So it's happening for the first 30 days. We don't get it in November. We get it sometime in December. It can be 60 days. Some reports come out right away. Got to keep your eye on things, okay? I get it. I get the argument that to be just data dependent is a problem. The Fed needs to have some of the data that is more up with what's happening now so they don't get behind the curve the other way. They just missed it one way. They don't need it to miss it the other. That is the other argument you're going to hear. Dollar stuck in the middle of no man's land. It's not trending. It's just going sideways here. FXE trying to get a bid as the talk is that the European Central Bank right now is reading reports. Somewhere between 75 to 150 basis points is on the table, according to many analysts. I don't know that bank to be bold and go for 150. That's my dilemma. This is a bank that's always behind the curve. Always, always, always. So 75 is probably more likely. If they squeak out something, could be 100. But the trend is up. Resistance comes in 91.79, and that's what I'm saying. But I talk about this, as you hear me talk about it now, in the morning for my subscribers. So the first thing, today I think I was recording just after 9 o'clock. And we're going through the markets, and I'm telling them, Meta's a great example. And I'm going, I don't know, you're not embedded. This could be a zone you look at pretty hard. You talk about all these markets. Now, while I show these, it's just a sampling. I'm forever rotating. All right, I like to rotate. We go into the things that are hot and that you ask for from time to time. And that'll be the other thing. All right, so you get that. If I see a bonus that I should do for you, I'll do bonus videos with it. It's all part of my subscription program. What you see here for free is not, it's this with my hand tied behind my back. Let me explain why it's this. The government says that for me to make actual recommendations in this video, the analysis has to be up there. I have to know who my subscribers are. I'd have to have everybody's name and so on. I'm a registered broker. My rules are different being a futures broker than the typical person out there. We are under a lot of scrutiny. So I don't do that. I do it in the subscriber videos. And believe me, I'm a cowboy. I'm out there and I'll go, do this, do that. Am I going to be right? No. Today I think I was wrong. I think I had 5 recommendations between Friday and today. I think I was wrong in 2 or 3. It doesn't matter. Little losses, ideally, on the ones you're wrong, the bigger profits on the other. Nobody can win every trade. If you're looking for that, keep looking, okay? Let me know when you find it, all right? That's real. That you can send me your real account and you've made the money following that guy. I'd like to learn myself, but I don't think anybody can do that. There's a difference between trading and investing. You and I have talked about that. But go to iraepstein.com. Just go to where the research section is. Everything's explained to you right there. Give it a try. These are the exciting times. It's not going to be exciting at December. It's right now. I'm Ira. You have a good day.